Welcome to TICE. As the digital landscape continues to reshape India's financial sector, the Digital Lenders Association of India gears up for an insightful event, the DLAI Conclave 2024. Scheduled for March 6 in Mumbai, this gathering promises to be a hub of innovation and collaboration, bringing together industry stalwarts and budding startups alike. But before we delve into the excitement of this conclave, join us for an exclusive conversation with Mr. Jatinder Handoo. He is the CEO of DLAI. Welcome, Mr. Handoo. So, to begin with the conversation, can you tell me about DLAI?
Digital Lenders Association of India, which is India's premium industry association for entities engaged in digital lending. We are perhaps the oldest industry association of digital lenders in this country, registered in 2016. Currently, we have close to 100 members who are lenders as well as ecosystem players. So, the various kind of role, just like any other industry association, DLA performs is taking voice of its members to appropriate offices, appropriate platforms, playing a critical role in enabling client grievance redressal mechanism, client protection, and also ensuring responsible market conduct of our members. So we work very closely with policymakers, regulators, and other ecosystem players and external stakeholders in this country. So this is in a nutshell about us. We are registered. We have a registered office in Bangalore, and Secretariat of DLAI is in Delhi. So this is in nutshell about who we are and what DLAI does.
Also, as the CEO of the Digital Lenders Association of India, you are at the forefront of the FinTech evolution shaping India's financial landscape. So, what, according to you, are the key trends do you anticipate will define the future of this space?
This is an interesting question, and one is tempted to ask it, particularly after the COVID. We saw a great resurgence of fintech and especially digital lending in this country. So now coming, looking into the major trends, I think one trend, if you look at the India, the kind of financial inclusion which has happened, of course, on bank account side, thanks to Prime Minister Modi and the current government's initiatives, every household now has a bank account. So while Prime Pradhan Mantri Jan Dhan Yojana is there and bank account is there, India still has a very low penetration of credit in India, and especially for MSMEs, small and small businesses, micro businesses. So I think one of the key trend is the movement of flow, especially through digital lenders to the small businesses. So small business finance is of course a clear trend, and which also contributes, not just contributes to the economic development, but also generates jobs, helps in generating the job creation part of that. Second important trend what we see is movement of funds to EVs, yani electronic vehicles and green financing. So I think that's the another trend. Education finance and financing the healthcare is another piece which we are envisaging more movement into this side. And finally, there was a report which we jointly came up with Ernst and Young in last September, which is September 23. And we were encouraged by findings that one of the findings was that the household consumption expenditure in India is going to increase up to 200 and more than 200 crores by 2026. I think 3 billion US dollars, something like that. So if this is the quantum of expenditure which households are going to contribute or spend, there is an ample opportunity for digital lenders to contribute to this and finance this consumption. And consumption, by the way, plays a very critical role and contributes significantly in economic development and in the GDP of a country. Over 50% is the contribution of household consumption. So I think these are some of the prominent trends which we see in different sectors. So I'll pause here.
So, you mentioned a whole revolution that is going on in the country. But if we talk about from a customer's perspective, how do you envision, digital lending transforming their borrowing experiences? Maybe compared to the traditional methods, and what benefits do they really, get from this method?
Thanks for asking this question. You would remember there was a time when legacy banks or existing banks. The borrower used to go to banks, and then, in fact, I have been a banker in my career. I started my career as a banker, and I could see how people found it difficult. Nothing wrong with banks, because of the penetration of bank branches in our country was very low. Before 2010, there were just 30,000 rural branches in this country, and urban branches were like, I think, about 100,000 or something like that, total branch network. So the pressure per branch, the number of customer per branch was very high, roughly, close to 20,000 customers per bank branch, which now probably has reduced to maybe 12, 13,000 per branch, kind of a thing. So the digital lenders played a very critical role, or a fintech overall played a very critical role in taking financial services to the doorstep, or on the or on the fingertip of a customer. Now a financial service is just a click or a tip, kind of a touch away from the keypad of your smartphone. So this the convenience and the speed is very critical, and that is the defining factor which fintech lenders have brought in for customers as a whole. But what is more important is also the movement of money. The movement of money has become very fast. If an entrepreneur who needs money, within a specified period of time, say within a 2 days, within one day, ordinarily in the past it was very difficult for that entrepreneur to get that money within that period of time, because there are lots of formalities, and of course, as I said, number of customers per bank branch were very high. Now with the advent of fintech and fintech lenders, when, by the way, they work in collaboration, many fintech lenders, their models like, FLDG or maybe co-lending model, where fintech lenders work in partnership with banks. So they, and not just disbursement of loan, but also in origination of new clients. So in both ways, they collaborate with the mainstream banking system, banks, and big NBFCs. So I think this is something which is happening at B2B level, the partnerships, and at B2C level, customers are experiencing the convenience and the swiftness of digital lending in this country. And as I told you earlier, the kind of gap which existed, so if digital lenders are playing a very critical role in plugging this gap and meeting this demand at the customer level.
Also, in this whole transition, innovation plays a crucial role. So, could you share some insights into how digital lending firms are adapting to meet these evolving needs, and what is the role that innovation is playing?
No, as you rightly said, innovation is the bedrock of fintech. The only, I would say, the major differentiator between any financial service provider traditionally which was existent in this country or anywhere in the world, and fintech is the innovation, and which actually differentiates them from the rest of the ecosystem. So as far as innovations are concerned, there are multiple innovations which have taken place at product level, process level, technology level, and not just that, about also at customer level, the kind of shaping of behavior of a customer. You look at the entire digital lending space or payment space. The entire market was built about, if you look at 6 7 years back, there was very kind of the people were a little hesitant in using digital technologies, but slowly and steadily behavior of a customer was shaped up, and due to different incentives, different innovations, and then how now all of us don't think twice while using our mobile phone for making payments or receiving remittances and things like that. In addition to this, I think the critical innovation which has happened is also on the product level. I think embedded finance products are very important here to mention, and a product like buy now pay later is a innovative product and then it provides a flexibility to buyers, and especially first time customers who who may not be uh, eligible as per the specified norms of banks to get a credit card. So those who are not and not just those, but even professionals like you and me, so we also have access to this BNPL product. So I think that that's the another piece, the product level innovation which is happening. The process, as I said, product level innovation, process level innovation, and the technology level innovation which happens.
When we talk about innovation, a major thing which comes is security and a lot of concerns related to consumer right protection. So how do you think can digital lenders balance innovation with consumer protection?
No, I think that's very important question and very relevant also. And even regulator and government agencies are very much involved in this. An institution like DLAI, which is right now a deemed industry SRO and aspires to get an RBI recognition for self-regulatory organization. So we have various checks and balances and various processes in place to make sure that innovation is responsible, and if there are any complaints or grievances from customers level, they are adequately taken care of. There is a mechanism to reach out to DLAI in case the primary lender is, if there is some dispute with the primary lender. Customers can reach out to DLAI through a website and the email ID, which is cgrm at dlai.in, and we receive a few queries and suggestions and complaints also, and we take up it adequately with the respective organizations as and when. However, the volume is very small. So there is a apparatus, there is a architecture at DLAI, and being a responsible industry body, we have ensured that all of our members also adhere to DLAI code of conduct, which is largely modeled on the basis of digital lending guidelines of Reserve Bank of India. So right from issuing a key fact statement to having a transparency in pricing of credit and disclosure norms, I think those who are our members institutions, they follow this code of conduct, and these are some of the measures which are there for balancing innovation with client protection or grievance related issues.
Right. Also, DLI conclave is approaching and it is themed around fintech evolution, pioneering India's financial landscape. So, what discussions are you most excited to see, and how do you think these discussions will impact the digital lending industry?
Well, I think thank you for bringing that in. On March 6th, 2024, we are having a DLAI conclave in Mumbai at ITC Maratha. I would encourage your viewers to register online and be part of this very special, and I would say India's authentic fintech conference, where and I'm really excited about having, looking forward to listen to views around MSME finance, the potential which digital lenders have, especially the possibilities like credit, non-bank credit on UPI, the connecting, how that credit could be connected, the OCAN and ONDC kind of a discussion, and the Jugalbandi of fintech. And in addition to this, there is also going to be discussion on the emerging contours of self-regulation and sustainability of business. There are different roundtables which are happening with technology players, with partner organizations. We are having, I think we are expecting more than 600 delegates to be there, and this is perhaps India's most authentic fintech conclave, which is happening in 2024, in the beginning of 2024.
Right. We hope that the conclave will lead to some really serious discussions for the industry. And Mr. Handru, in your previous questions, you talked about regulations for the fintech industry. So, how like, what role do you believe that collaboration between industry stakeholders and regulators really play in fostering a healthy fintech ecosystem?
Well, in any progressive society and a developing country like India, where, as I told you, even if you look the role of private credit in private sector development, and I mean to say private sector entrepreneurship development, the role of credit is very important. Unfortunately, in India, according to World Bank data, the credit to GDP ratio is lowest among the world, and even lowest in among the South Asian countries. So, and credit is a very critical input for accelerating economic growth of any country. uh, Ours is, I think, the ratio, India has around, I think, 60-64%, something like that, which is way below the world average, which is 184%. So within this background, it's very critical that the intersection between self-regulation, innovation, and regulator is very critical. As a custodian of industry code of conduct, DLAI understands the concerns and observations which regulator has, and everyone has the same objective of ensuring or promoting a stable market, ensuring responsible market conduct, and also at the same time facilitating rails for flourishing of fintech business in this country. And Private sector plays absolutely a critical role in furthering access to finance. Even if you look at UPI today, which is a great success story, and now going in foreign countries also, the role of private players or private fintech players is very important there. Of course, government has set up rails of UPI as a digital public infrastructure, but you look at the firms who have actually been harbingers or at the forefront of taking UPI to retail customers and facilitating those transactions. Similarly, on the credit side, however, we are very thankful to government and our ecosystem partners like SIDBI and Mudra and others for having those facilities for credit. But it is private sector which takes that, finally they takes that credit to the last mile customer, and also brings the previously unbanked and underbanked entrepreneurs and populations into the banking or the credit fold. I think that role of fintech players or digital lenders becomes very critical in ensuring universal financial inclusion in this country. And but however, having said that, there are certain bounds or boundaries which are actually enunciated by our policymakers and regulators. And being a responsible industry association and a deemed industry SRO, which is, as I already told, we aspire to have a recognition from RBI for the same. And in that role, we also play we are very cognizant, and we play an important role in also making sure that there is a responsible market conduct. Client protection is at the top, and in case there are any grievances at customer level, they are adequately addressed. Risks which there is a possibility of any risk creeping into the system, they are actually plugged in at appropriate time with appropriate processes. And that's why we, as I already shared with you, we have a industry code of conduct which all of our members follow in letter and spirit. And we also conduct timely kind of a monitoring activity whether the compliance is happening, and all these infrastructure and apparatus for ensuring that compliance with code of conduct and guidelines of RBI are there. They are well
Right.
in place at DLAI.
So, Mr. Handu, we have talked about the digital lending industry and its stakeholders. But if we talk from the perspective of individuals who are considering to take out loan through a digital lending platform, then what, according to you, are the factors they should carefully consider?
No, I think that's a very important question you have raised, because in especially off late now, and particularly after during and after COVID, what we have seen is a kind of menace in the ecosystem in the name of unauthorized lending apps and some shady operators who call themselves as digital lenders and malign the entire ecosystem. They are not lenders; they are purely cyber thugs or cyber criminals. So common
Right.
masses and the customers should be very much aware about how to distinguish between unauthorized platform and authorized players. So for that, I think there are few things they should uh, ensure before entering into any transaction with any player. First and the foremost thing is that they should try to find out whether the firm with which they are engaging is registered with RBI or is member of any industry association like DLAI. Simply they can do it, either they can go on DLAI's website www.dlai.in and look, there is a list of DLAI members, at least 100 of them, so they can at least be
Right.
sure about the 100 members who are members of DLAI. Second, they can always go to RBI's website and find out a list of NBFCs which are registered. At least the NBFCs they can find out. However, there are also a set of entities we call LSPs or loan service providers, which may not directly be regulated by RBI, but they follow all regulations applicable to regulated entities, the principal regulated entities. They are also allowed to work in this country. They are registered with Ministry of Corporate Affairs. Now, the some basic things are like, uh, before, if any customer is accessing or engaging with a firm which offers them a application app. So first of all, look at the reviews of that app before downloading on any either a Play Store or iOS store. Before downloading, go through the reviews and the star and see what comments are there. Second piece is very important, is if anyone sends you a link and says that you don't download this app through this link, it is not available on a Play Store or an app store, please do not. And this should be a great red signal, because now even Play Store and App Store are also become very cognizant, and they are also very supportive in weeding out these unauthorized players. So that's why they don't list these apps. So if someone is sending by a link, please do not do that. Third, always visit a website. So there has to be a website of any legit business, any legitimate business, and look at the address, who are the people, the team and the management details and all those things. And once you enter into a agreement with any firm, insist for a key fact statement. RBI has mandated, as per digital lending guidelines, each lender has to share a key fact statement, explicitly mentioning the terms and conditions of engagement, the loan or any service, and also including the effective interest rate and details of nodal grievance redressal officers. So all these things have to be there. So please insist and look for these red flags, and the customer should not fall victims to any very easy credit or credit without documents you can get credit. If someone is saying like that, please treat them as a red flags. There is no credit in this country absolutely with zero documents.
Right.
KYC is very important. Know your customer formalities, which is mandated by Reserve Bank, irrespective of whichever service providers is there. They will definitely ask for KYC, and they must look at those red flags which I have just shared with you. Thank you.
Right.
No
Thank you
problem.
so much, Mr. Handu, for this insightful conversation.
Thank you so much for having me. Thank you.
Let's stay connected with TICE for more updates from DLAI 2024.